Hello, everyone. Today, we are diving into one of the most exciting revolution in finance, DeFi or decentralized finance. Think of everything banks let you do saving, lending, borrowing, earning interest, but without the bank actually controlling the system. And to explain that with me, I have Suganth.
Thank you, Kaviya. DeFi is basically a financial system built on blockchain, mainly Ethereum, where smart contract replace banks. So instead of trusting banks, you can transparent code that cannot be biased, hacked easily, or manipulated by one central authority.
Okay, so let's start simple. Traditional finance is equal to centralized bank control accounts. They decide interest rates, they approve or reject loans. But in DeFi, no banks, no intermediaries, no paperwork, everything runs on smart contract. So if you want to deposit money, borrow money, trade assets, you interact directly with the blockchain.
So, Kaviya, if there is no bank, then who holds my money in the DeFi?
Good question. You hold your own money. Your funds stay in your crypto wallet, and when you use a DeFi platform, you're temporarily lock them inside. Smart contracts, not with a third party.
Okay. Now, imagine you want to lend money. In banks, you deposit, they use your money, they give you 3 to 5% interest. But in DeFi, you deposit your into lending protocol like Compound and Avail. Borrowers take loans instantly using crypto as collateral. You get higher interest because there is no bank in between. All of this happens automatically through smart contract.
That's nice. Sugan, if is DeFi safe? What happens if something goes wrong with smart contract?
That's a good question, Kavya. But smart contracts are powerful, but not perfect. If code has bugs, funds can be at the risk. That's why audits, bug bounties, and security practices are extremely important, especially companies like SecureDApp that audit smart contracts.
Okay, that was nice. So you can lend crypto and earn interest, borrow crypto by locking collateral. Borrowing is instant, no credit score required. But if your collateral value drops too much, it can be liquidated immediately automatically. So, why would someone borrow crypto if they already have money, Sugandh?
There are two important reasons for that. One is leverage. Borrow more to invest more. Second, avoid selling. People borrow stable coins without selling their crypto to avoid taxes or losing their long-term positions. Now, staking. Staking means locking your crypto into support the network. For example, staking Ethereum helps secure the blockchain. You earn rewards just like earning interest, but with better transparency. So, Kavya, if staking gives more passive income, why doesn't everyone do it?
Okay, so because staking has lock in periods, rewards depend on network conditions, some assets can drop in price. So it's not risk free. And moving on to liquidity pools. Liquidity pools are the backbone of decentralized exchanges. Instead of buyers and sellers, you have pool of tokens. People like us deposit token into the pool, earn a share of trading fees. So, like that it works.
What's the catch, Kavya? Why would someone not provide liquidity?
Okay, so because of the risk called impertinent loss. If one token's price changes too much, you might end up with fewer profits than just holding the tokens.
Okay. Now let me break down the difference between DeFi and traditional banking. First one, control. In banks, it is very decentralized system, but in DeFi, it is decentralized. Second, permission. In banks, you need approval, but in DeFi, anyone with a wallet gets a permission. Transparency is very low in banks, but in DeFi, it is 100% transparent. And You'll get a very low interest in banks, but in DeFi, higher and volatile interest you'll get. Speed, actually, it is very slow. It takes about 1 to 3 days, but in DeFi, it is very instant, the speed. Access, very limited in the traditional banks, but in DeFi, it is globally accessed.
Okay, that was nice. So Suganth, so does this mean DeFi will replace banks completely?
That's a good question, but not completely. Banks provide stability, compliance, government protection. DeFi provides innovation, speed, and freedom. The future is hybrid finance and a mix of both.
Okay. So here are some real things people already do with DeFi. Sending money internationally in seconds, earning 5 to 10% interest through lending, trading assets on decentralized exchanges, getting crypto loans without paperwork, staking to earn passive rewards. So Sugant, if is DeFi only for rich crypto people?
Not at all, Kaviya. Anyone with a smartphone and internet can use DeFi. That's the true spirit of banking without banks. DeFi is a powerful, but we must understand the risk. Smart contract vulnerabilities, price volatility, rug pulls by shady projects, user mistakes by sending funds to wrong address.
Okay. So DeFi removes, and that's where the security audits, compliance, and education matter. The ecosystem is maturing and innovations are happening fast. So DeFi removes the middlemen and gives proper back to users. It's transparent, global, and permission.
But with great power comes with great responsibility. So always learn, research, and secure your assets. Thank you.
Thank you.